Good morning, everyone. This is Ryan Enner with your Tuesday, September 17th morning wake-up call. Harvest pace numbers from Sunday night are in. Corn harvest came in at 9%. The bean harvest came in at 6%. Both those numbers are just slightly above the 5-year average, which likely comes to no surprise to most people listening to this morning commentary here. The corn here on little to little fresh news at all continues to gravitate to 410. In recent days, we've seen highs right around 415. So we've seen 5 highs there actually in the last 2 weeks. It appears as though the 415 area is acting as resistance for now, but on little fresh news, the December corn continues to enjoy gravitating to 410. In beans yesterday, we had a highly disappointing crush report. It came in at 158 million bushels when trade expected 171.3. On a crush number this disappointing, we may now be able to suggest the USDA's previous crush number from the last report was 11 million bushels too high. Now, if that is the case, we've seen beans gravitating around 1010, 1020. If we do make a case that crush was set 11 million bushels too high, then that might mean that November may start choosing a level to gravitate to that's right at $10, so slightly lower than where it's been spending most of its time recently here. We continue to see regular 8 a.m. sales of beans. That is normal for this time of year. What we want to focus on for any potential demand support is whether Thursday's weekly total number can come in above average. Over in wheat, hard red winter wheat planting at 14%. That was 1% ahead of average. But yesterday's selling may have suggested that trade was looking for a much faster number than that. So even though the planting came in at 14%, traders might actually be slightly disappointed with that number, and we're seeing a little bit of overnight support. Over in cattle, box beef, again, yesterday made new 4-month lows. The show list is set at 11 plus 11,000 this week. That box beef has been moving to new 4-month lows almost daily, and that's just a factor we can't get around. Now, packer profits as they stand this morning, still at $9. So we might actually still see a higher cash trade this week. If bids come in early in the week, while packers have a little bit more of a packer profit to work with, you may see a higher cash bid as early as today. And that's good. So we still have reason to expect maybe even a higher cash trade this week. But again, if box beef continues to grind to new lows on a regular basis, there's no way around it. That's going to be longer term negative for both cash and futures. So once again, we're saying that for a long-term outlook, the place to be focused is on box beef. So that's what we have here for your Tuesday. If you have any questions, give me a call directly at 815-578-6159 and continue tuning in to Morning Wake Up Calls.